Everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 4th of October, 2019. Hope you had a good week of trading. The market really came back here strongly the last 2 days. The NASDAQ was actually higher on the week, and so were the semiconductors, which have been leading the way. And it makes sense if the semis are going to be up 2%, that the NASDAQ should be up as well. Let's take a look at the individual stock, or the ETFs rather, and make some sense of it. So we came into this week a little bit cautious, thinking that there was a potential of breaking below this important level here that was not only the 50-day moving average, but the prior resistance, which had turned to support. We lost that, came down very close to the 200-day moving average, and then ramped higher today after yesterday, gapping lower and then starting to come back. So where that leaves us right now is just at, sorry for flipping around so much, we'll look at the 30-minute time frame. Here's our volume weighted average price off the all-time high in the S&P 500. You can see we're coming right up to that. And when we back it up, let's say to a 65-minute time frame, this has been that band of support and resistance. So impressive it is, but when you look here, there's still a pattern of these highs being lower than the prior high, and there is a pattern also of these lows which are lower than the prior lows. So let's see if next week we can start to stabilize a little bit, but realistically we're in a much bigger range, and there's really not much directional bias here. We have a declining 50-day moving average, we have a rising 200-day moving average, and that tells us that it continues to be more of an individual stock picker's environment. The NASDAQ came right up to its 50-day moving average as well. I don't have to go blow by blow on all of these intraday, but the Russell 2000 has been the worst. It came down into this level of support that we've seen earlier this year, and it did find buyers once again. But we think about how this market evolved in the last 3 weeks. We had this big rally in the Russell 2000, and then we were looking for it to hold and then potentially leave us with some leadership. But if we go back to September on that 30-minute time frame once again, you'll see that once it began that pullback, it maintained below the declining 5-day moving average. There was no evidence that the buyers were regaining control. We had lower highs and lower lows. We got above it briefly here, but the 5-day moving average was declining. That's where we are today as well. And perhaps we find some further bounce next week. And if we were to bounce even all the way up to 151, well, that would put us right at the 200-day moving average and that volume weighted average price from the December lows. So nothing really to be excited about. If you're long, great. Know where you're great if you just got long, that is. I would say your stop would go under here to protect any short-term profits that you have. That's about 147-ish. This, if you're not following along, by the way, with what time frame I'm looking at or finding it confusing, this is the 15-minute time frame. If you see an orange moving average on any of these time frames, it means it's the 5-day. And I use the 5-day only on intraday time frames. I've done a blog post about how to convert that. Semiconductors were the strongest this week. And again, where did they find buyers? Right where they were supposed to, right where we wanted to see them. That is, the prior resistance and that 50-day moving average came together, and they bounced pretty dramatically from there. Again, they were up, what percentage this week? 2%. So nice recovery in the semiconductors. I don't know if you saw the Real Vision video I did about that, but my favorite one has been in there for a little while is NVIDIA, NVDA. Where is that on my list? How come I can't see it? There it is, NVDA. But I've been talking about this one, and I spoke about it on Real Vision again because we had this big run up, and then it got slammed in 2018, and basically we've spent most of this year kind of consolidating and rebuilding from that. Well, what we're seeing is this red volume weighted average price is anchored to the peak, and what we see is it's flattened out, as has the 10, 20, 30, and 40-week moving average, and in fact those are all turning higher. So we've got a rising 50, 100, 150, and 200-day moving average. We're above the volume weighted average price off that peak. We're above the volume weighted average price off of this level, and when we go over to the daily time frame, you can see the buyers stepped in here just at the beginning of this week, right at the rising 50-day moving average. So, it all comes down to where do you buy the stock. Here we can see that we had this big run, and then failure, now another big run. So it's up to you to decide where to buy it, but I think the worst case stop I've been saying for a while is about 168, and this week we did hold through the above that level. Financial stocks came down right to the conjunction of the 200-day moving average and the volume weighted average price off those December lows. Now they rallied right up to the 50-day moving average. So when we look at this, maybe we have a little bit more room to run before the profit taking occurs. That is the volume weighted average price off of the recent peak. Maybe Monday into Tuesday we start doing something like this and then pull back, see how it responds to the 5-day moving average. The 5-day moving average flattens out, and then perhaps the buyers can have a little bit more confidence. But again, it was a harsh sell-off actually for the financials when you look at the consolidation that they were in, and it looked like they had the potential to lead if they could have broken above this little resistance. I was prepared to get long the financials there, but instead, obviously, it failed to move higher in that area. It didn't break beyond that, and we saw the failures. So, this group, what did they lose this week? The financials were down, 2.2%. So pretty much the opposite of what the semiconductors did. Taking a look at, let's look at gold too, because this was interesting. Earlier in the week, I saw a bunch of post on social media about the head and shoulders pattern, this being the shoulder, this being the head, and this being the right shoulder. And I saw so many posts of people saying, hey, it broke the neckline. Well, right here on, I guess that was Tuesday night, I had done a little post about this saying, look, this is most likely a shakeout because we still have a rising 50-day moving average. We generally want to trade for swing trades in the direction of the 50-day moving average. And, looking to gold, this was just a little pullback within the bigger, much bigger uptrend that we're involved in. And I think this market goes to 150 plus, 153, 155. And the people who either shorted here, scrambled to get back, to a position of break even, or the people who had stops underneath this level are likely, repurchasing that. So we have, from failed moves often come fast moves. That's a, psychology of this market. So don't get caught up in just recognizing patterns like a monkey does, but instead say, what's the bigger picture? How does it fit in with this much bigger breakout? And we saw that, where the breakout really occurred in gold. We'll go back to the daily time frame again. We'll put a volume weighted average price. This is where the move began, right there. And as long as we maintain above the volume weighted average price from that level, it's telling us the average participant is still making money. So the buyers are in control in there. Whereas you look at something like Amazon, I've been avoiding that stock because it's been below the declining 50-day moving average. Now it's even stuck below the 200 in the volume weighted average price from the December low. So looking at Amazon, it's a great company. No one can argue that. It's, whatever fundamental stuff you want to look at. But it looks very similar in here to the way that Netflix looked as it broke its 200-day moving average in the volume weighted average price from last year. So these stocks, I consider, Netflix and Amazon, guilty till proven innocent. I keep an eye next week on Beyond, shares of Beyond Meat. They've been holding this volume weighted average price from the IPO outside of this 1 day right here. And then we're also below the 20-day and the 50-day moving average. They're both declining. We're below the volume weighted average price from the peak. We're below the volume weighted average price from where this move began. I guess I didn't draw that perfectly, but from where this move began, we can just rejigger it. We're still below that. So when we look at, for instance, a 30-minute time frame, let's just clear that all off. And here now we're looking at about 2 months worth of, or about a month and a half worth of. So this was a week and a half ago when I guess McDonald's was testing some of their fake meat. We're below the volume weighted average price from that and the low from before that. I think that, going into next week, keep an eye on this area as a area of potential resistance, and breaking below today's low might be enough to see it break down and then finally really get some true downside in this stock. They could come down in towards that 110-ish type area. Thanks for tuning in. Hope you had a good week, and I'll talk to you again next week. Thank you.